Good morning. This is Tom Alexander. It is Sunday, July 30th. We have one more trading day left in this month. This is the weekly video update. It is an addendum to the written report that I publish each week. You can find those reports. There are two ways you can get them. The first way is you can get on my mailing list. If you're not on my list, you can go to, and you want to get on my list, send me an email, tom@alexandertrading.com. I'll put you on the list. You will get notification when I post free stuff. And another way is you can go to the website. Again, it's really tricky. It's alexandertrading.com. And up here, there is the toolbar. This is the website. Up here, you go about, purchase courses, weekly update, data reports. Weekly update, this is free. All the reports are archived here. The one that I'm doing is not posted yet, but it will be posted as soon as I complete this video, and it will join the list of the others. And all you have to do is click on them, and you will see all the material. This will enable you, if you choose, to follow the progression of the analysis. I think it's consistent, objective, and as accurate as anything that you're going to find out there in Traderland. Okay, let's talk about the markets. The markets are in vertical development from an auction market / market profile perspective, i.e. a trend and normal trading nomenclature. And it's caught a lot of people by surprise. The beautiful thing about using auction market analysis and price action is that you're depending on the actions of the participants to tell you what's going on and what might happen, as opposed to magic and guessing and all these other things that are used. Okay, so let's take a look at the charts. And I landed on a weekly chart of the SPX, so we'll just run through the weekly charts, and it's very clear we're in strong vertical development, and it's actually began to accelerate back in late April. And there's been very little retracement, very little time spent in consolidation or balance sent. That's unusual. Another thing that I'll point out is that there is nothing in terms of potential resistance until you get to all-time highs. Now there's a little pivot high here, but we're so vertical. Stopping here to me would be maybe we do, maybe we don't. We're sort of overdue for some sort of balance. But what the net of the U.S. stock indices to me is that you're going to see new all-time highs in one or more of the indices sooner rather than later. So that's the SPX. Let's look at the NDX next. And the NDX, it's led the charge higher. Now, lately, it has lagged a little bit. You can see it still hasn't taken out last week's high quite yet. And let's move over to Mr. Russell. Now, the Russell is interesting because it has been the index that has caused a lot of people, including me, to doubt or to question whether or not we're truly in a new multi-year bull market that lasts, 12 plus months. We could be, but quite frankly, the Russell still has not confirmed that. The Russell needs to close above this level. If at first it had to close above this breakout, this balance area, it did. Then it had to close above this area, and it did. Now it has reached probably the most critical key reference area of any of the four indices all year in terms of the significance of that area and the implications if that area is broken to the upside. Now you can see, even if it's broken to the upside, you're still going to be 20+% away from all-time highs in the Russell Weekly. But we can go a long, long way in the other indices deep into new all-time high ground without the Russell actually ever making a new all-time high in a bull market. So there's still a lot of if and or buts surrounding the Russell. If it were not for the Russell, it would be all systems go. You have to buy this market. We're in a new bull market, etc. The Dow, for instance, is less than 3.7% away from a new all-time high, and it is the strongest candidate at the moment to be leading the field, and is the most likely to cross the all-time high finish line first. You can see we're not that far away. Now, the weekly, also I'll point out here, the last week's, not last week, but week before last week's lows are critical. A close below those lows would bring a bull thesis into question. Okay, let's look at the daily indices now. And the daily indices, and I'm just going to do a pretty quick flyby here to see if there's anything that crosses my mind. These levels are in the report, and there's no point in me sitting here reading levels to you. You can go read them yourself and study them if you choose. But the SPX now is hovering around this 4,600 level. The significance of 4,600 is that it's a round number. Option positioning tends to be clustered around these even strikes like that. So that is really the only significance of the 4,600 level. The NDX, you can see we did not take out yesterday's high. A week ago's high. This is your downside level. Look at the Russell real quickly. And you can see we're between, actually, Thursday's trade and the Russell, the high and the low are important levels. And then, of course, we have Mr. Dow, and it's in, the indices are in minor balance areas. Now, speaking of balance areas, let's spend a little bit of time, and I spent a lot of time this week going over quote unquote market profile and its implications. And I strongly encourage you to read and study that bit. Market profile is not what it is portrayed to be on Twitter. All the media, all the trading educators have it wrong. They have hijacked something that was not intended to be a trading system, not intended to be magic, and taken it away from its true intention, which was to identify market condition, specifically auction market condition through the lens, price action through the lens of auction market condition. It is a graphing format. It graphs data in a specific format that gives you a view of that highlights the view of trade activity on the horizontal scale, not the vertical scale, which gives us a relative idea of value in the market. There are three phases of development. It also clearly shows those three phases. At the moment, we are in a vertical phase of development. Each unit you see here is a quarter. Each letter is a week. So what we have now is vertical development that began back in late April. And what has not happened, if you notice, if you were to scroll through this set of data, you would notice that to one degree or another, you have these volume nodes form within that quarterly auction. Now, you can only go so far in chronologically constraining the auction as long as you're consistent with it, and then you use that particular chronological constraint and you can manipulate it into what is actually going on, which is what I have done here. It's not as simple as saying, oh, the July auction is continued. The second quarter or third quarter auction has begun. The second quarter auction doesn't matter. Well, it does, because actually what has happened is that a new auction began in the second quarter and is carrying over into the third quarter. So this is a step one. This is a phase one of development. The next phase of development will be the development of a volume node, where you have more overlap than we've seen since that April low. You'll see more overlap in these letters. In other words, the weeks will overlap more. And then, of course, you can go down in time frame to get Now, this is a monthly view, meaning each profile unit is 1 month, each letter is 1 day. And what you have here, this is July is forming what is known in market profile parlance as a double distribution, meaning 2 auctions. This is an auction here divided by the letter L, and then this is an auction here. You can see the late July auction, latter July auction has formed a mature balance area. We're trading near the upper extreme of this balance area. The next thing that is going to happen is you're going to get another distribution in this time frame, meaning you're going to have another range established. You're either going to go higher and establish another range up in here somewhere, or we're going to form a top in here and maybe rotate down into this area. And I have outlined those 2 scenarios in the written report that you can find on the website. Okay, looking at the technical situation, it is the same. It's confusing. It's not consistent with price. It's divergence from price, but that has meant absolutely nothing for many, many months. It's something to keep an eye on, but you always use price to confirm any view outside that's derived from outside of price, and this would be one that has to be confirmed. By this measure, you have divergence after divergence after divergence. The red line is a 10-day moving average of advanced NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues, and the blue is just the simple NYSE net closing breadth for the day. So, guys, I hope you found value in this. If you did, please subscribe to the video, and I'll have more material out for you soon. Thank you.